Hello, my name's Washboardjim, the founder of the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. And I've talked about this strategy before. It's called the inverse head and shoulders, catching it off the second shoulder line on the right. I always like to, I'll take it off the first, but that's a scout, and I like to see them retest and hit that right shoulder twice. And that's usually when you have your big breakouts, along with a good little tweet or some news. And we've been getting all kinds of different news, different propaganda. You know, the fat cats are very bearish, and really bearish, more than the 20. I'm more bullish than I've ever been my whole entire trading career. And I listen to all these institutional traders, CNBC, Schwab sometimes, just pulling out these bear calls, just constantly whining and bitching about thinking we're going to have a big pullback, and I don't feel that at all. I feel the market's a little frothy, and pullbacks are a buy, but I'm not going to call a 2007-8 pullback like we had during old drama years when things were really bad. They're not bad right now. I'll tell you when they're bad. So we got an inverse head and shoulders. We've got an inverse head and shoulders and a head and shoulders. So I took this first trade, the 74.25s, off the shoulder line of this head and shoulders. I got in a little early on a triple bottom. It dipped on me. So I added on, and we hit that right shoulder twice. You got your left shoulder, your head, your right shoulder, the breakout, and I traded that to the 200. Then it came back, and that right shoulder, the second time, is the key of really getting in a good trade or knowing if the stock's going to be bullish or bearish. I'm very confident in this trade right now. We're at 28.60. I'm not in it right now. I'm doing this video. So we broke out and we hit the shoulder line, and I sold my contracts. And then we kept going, so I jumped in on this pullback at $7, run it to 21, had two contracts. So I just want to illustrate, and we had what's called an inverse head and shoulders, and then we had a head and shoulders. We hit that shoulder line on that wick, and it pulled back, and then it came up and retested the second time and broke that head and shoulders. So that's a play. And then after it broke out and pulled back to the previous resistance, I jumped in the trade and run it up a little bit up to around in here. 2 big old minutes, about 2 minutes I was in and out of that trade with a big, huge bounce. So that's a sneaky snake trading strategy. That's just something you got to watch. Them inverse head and shoulders pop up more than any other pattern that I know of. We have the expansion pattern, and we had the inverse head and shoulders. The expansion pattern's right here. That's called a megaphone. So that would have been another exit idea. And it did pull back off the top of that expansion pattern. I'll draw that trend line in here. Take the body, run it up to that body. And there's your exit idea. That's called an expansion pattern. Megaphone. And it pulled back and hit that previous resistance. Boom, baby. It's so cool how these are symmetrical. If you just learn chart patterns, moving averages, and being in the now, and I'm more bullish than any trader out there in this market right now. I've talked about it over and over again. So that's it. Sneaky snake trading strategy. Everybody have a great day.